Today is July 28th, and welcome back to Global Monetary Watch. We begin today's update with a closer look at several economic and monetary developments that continue to attract attention among people following Iraq's financial reforms and Vietnam's expanding economy. Rather than focusing on speculation or unverified claims, today's report examines the confirmed policy trends, institutional reforms, and broader global financial environment that help explain why these two currencies remain subjects of ongoing discussion. Over the past several weeks, analysts have continued monitoring official announcements coming from Iraq's financial authorities. Much of the attention has centered on the ongoing modernization of Iraq's banking sector, efforts to strengthen financial oversight, and measures intended to improve compliance with international banking standards. These initiatives have been publicly discussed by Iraqi officials and international organizations for some time, reflecting a long-term strategy aimed at improving confidence in the country's financial system. The Central Bank of Iraq has repeatedly emphasized the importance of maintaining monetary stability while continuing reforms designed to strengthen the banking sector. Among the areas receiving increased attention are anti-money laundering procedures, enhanced supervision of financial institutions, improvements in payment systems, and stronger compliance requirements for banks participating in foreign currency operations. These measures are part of broader efforts to increase transparency and improve the efficiency of Iraq's financial infrastructure. Observers note that central banks often communicate carefully during periods of reform. Policy announcements are typically released only after extensive preparation, consultation, and regulatory review. This measured communication style is common among monetary authorities around the world because financial stability depends heavily on maintaining public confidence while implementing complex institutional changes over time. Another important aspect of Iraq's current economic agenda involves broader structural reforms beyond monetary policy. Government agencies have continued discussing programs intended to diversify economic activity, encourage private sector investment, strengthen digital banking services, and improve the overall business environment. These initiatives seek to reduce dependence on a single revenue source while creating a more resilient economy capable of supporting sustainable long-term growth. Economic diversification remains a significant objective because Iraq has historically relied heavily on oil exports to generate government revenue. While oil continues to play a central role in the national economy, policymakers have repeatedly stated their intention to expand opportunities in other industries, including manufacturing, agriculture, logistics, technology, and financial services. Building a more balanced economy can help reduce exposure to fluctuations in global commodity prices. Banking modernization has also become a central component of Iraq's reform strategy. Financial institutions have been working to improve digital payment systems, expand electronic banking services, strengthen cybersecurity measures, and adopt internationally recognized regulatory standards. These developments are intended to improve efficiency while making financial services more accessible for businesses and individuals throughout the country. International cooperation has supported many of these modernization efforts. Iraq continues to work with global financial institutions, technical advisors, and development organizations on projects involving regulatory improvements, banking supervision, and financial sector development. Such cooperation reflects a broader objective of integrating more effectively with international financial markets while strengthening domestic financial institutions. Recent discussions have also highlighted the importance of maintaining fiscal stability. Government revenue, particularly from energy exports, provides resources for public spending, infrastructure investment, and economic reform initiatives. Stable public finances can create a more predictable environment for implementing long-term policy objectives, although external economic conditions continue to influence government planning. Global energy markets remain an important factor because changes in oil prices directly affect Iraq's fiscal position. Higher revenues can increase available resources for investment and development projects, while lower prices may require policymakers to adjust spending priorities. As a result, analysts continue monitoring international energy markets alongside domestic economic reforms to better understand Iraq's evolving financial landscape. These developments demonstrate that Iraq's economic strategy involves multiple interconnected areas, rather than a single policy initiative. Banking reform, fiscal management, regulatory modernization, and broader economic diversification all contribute to the country's long-term objectives. While progress may occur gradually, these reforms illustrate an ongoing effort to strengthen institutional capacity and improve the resilience of Iraq's financial system. Turning our attention beyond Iraq, another economy that continues to draw interest from international observers is Vietnam. Over the past decade, Vietnam has steadily expanded its role as one of Asia's fastest-growing manufacturing and export centers. Investment in industrial production, infrastructure, and international trade has supported consistent economic development, making the country's financial policies an important subject for economists following emerging markets. The State Bank of Vietnam continues to operate within a managed monetary framework that places significant emphasis on exchange rate stability while supporting sustainable economic growth. Like many central banks, its policy decisions are influenced by a wide range of domestic and international factors, including inflation, trade performance, foreign investment, and global financial conditions. Maintaining stability remains one of the institution's primary objectives. Vietnam's expanding manufacturing sector has attracted companies seeking diversified supply chains. As businesses have broadened production beyond traditional manufacturing centers, Vietnam has benefited from increased foreign direct investment across industries such as electronics, textiles, technology, and consumer goods. These developments have contributed to stronger export performance and continued economic expansion over recent years. International investors often evaluate multiple indicators when assessing an economy's long-term outlook. These include productivity growth, infrastructure development, labor market conditions, regulatory reforms, and fiscal management. Vietnam has continued implementing policies aimed at strengthening these areas while maintaining competitiveness within regional and global markets. Such reforms are generally viewed as part of broader economic modernization efforts rather than isolated policy changes. Looking at the broader international environment, central banks around the world continue adapting to changing economic conditions. Inflation trends, interest rate policies, supply chain adjustments, and evolving trade relationships all influence monetary decisions. As these factors shift, countries regularly review their financial strategies to ensure that domestic policy remains aligned with long-term economic objectives. Global trade itself has undergone notable changes in recent years. Many countries have pursued new bilateral trade agreements, regional partnerships, and expanded commercial relationships with a wider range of international partners. These developments reflect efforts to strengthen economic resilience while reducing dependence on any single trading relationship. Iraq and Vietnam each participate in international trade networks that continue evolving alongside broader global economic trends. Financial analysts also pay close attention to payment infrastructure and banking connectivity. Around the world, governments and financial institutions are investing in faster payment systems, enhanced compliance procedures, digital banking platforms, and improved cross-border transaction capabilities. These initiatives are intended to increase efficiency, strengthen financial security, and support greater participation in international commerce. In Iraq, ongoing modernization of banking operations has included efforts to strengthen compliance standards and improve financial governance. Regulatory reforms are designed to increase transparency while aligning domestic banking practices with internationally recognized frameworks. Although implementation takes time, these initiatives represent part of a longer-term institutional development process supported by cooperation with international financial organizations. At the same time, Vietnam continues investing in financial infrastructure that supports domestic growth and international business activity. Banking technology, digital payment adoption, and regulatory improvements have all received increasing attention as the country expands its role in regional and global markets. These developments illustrate how financial modernization has become an important component of broader economic policy. It is important to recognize that economic reforms rarely produce immediate results. Large-scale institutional changes typically unfold over many years as governments, regulators, businesses, and financial institutions work together to implement new systems and policies. Progress often occurs incrementally, with each stage building upon previous reforms rather than delivering rapid transformation. For this reason, economists generally examine long-term trends instead of focusing on isolated announcements. A single policy update may appear significant on its own, but understanding its broader context requires evaluating how it fits within ongoing reform programs, fiscal policy, international cooperation, and overall economic performance. Viewing developments through this wider lens provides a more balanced understanding of both Iraq's and Vietnam's evolving financial landscapes. As today's report continues, one of the most important points to remember is that financial markets operate within a complex network of economic indicators, rather than responding to a single announcement or policy decision. Central banks, governments, commercial banks, and international institutions each play distinct roles in shaping monetary conditions. Because of this, understanding any currency requires examining the broader economic environment instead of focusing on individual headlines. For Iraq, several key areas continue to receive attention from economists. These include public finance management, banking sector modernization, digital payment expansion, anti-money laundering compliance, and efforts to strengthen relationships with international financial institutions. Each of these reforms represents a separate component of a much larger strategy aimed at improving financial stability and supporting sustainable economic development over time. Fiscal policy also remains closely connected to Iraq's long-term economic planning. Government budgets depend significantly on revenue generated from energy exports, making global oil markets an important factor in national economic performance. When energy prices fluctuate, policymakers often adjust spending priorities while continuing to balance investment needs, infrastructure projects, and essential public services. At the same time, Iraq continues pursuing projects intended to diversify its economy beyond the energy sector. Officials have repeatedly discussed expanding investment opportunities in manufacturing, agriculture, transportation, tourism, telecommunications, and technology. Although these transitions require years of consistent implementation, diversification is widely viewed as an important objective for improving long-term economic resilience. Vietnam presents a different economic profile but shares certain characteristics common to rapidly developing economies. Continued industrial expansion, growing exports, and increasing participation in international trade have strengthened its position within global supply chains. Government policies remain focused on maintaining macroeconomic stability while supporting business growth and attracting long-term investment into productive sectors. Around the world, international trade continues to evolve as governments negotiate new commercial agreements and businesses adapt to changing supply chain strategies. Improvements in transportation, digital commerce, payment technologies, and financial connectivity have created additional opportunities for emerging economies to expand participation in global markets. These developments influence economic growth across multiple regions, rather than affecting a single country alone. Another factor frequently discussed by economists is the importance of institutional credibility. Stable legal frameworks, transparent financial regulation, effective banking supervision, and predictable economic policy all contribute to greater confidence among businesses and international partners. Building that confidence generally requires consistent implementation of reforms over an extended period instead of relying on short-term policy announcements. When evaluating developments involving the Iraqi dinar or the Vietnamese dong, analysts generally review a broad collection of economic indicators. These may include inflation data, fiscal performance, banking sector health, foreign investment, trade activity, employment trends, and international economic conditions. Looking at these indicators together provides a more balanced understanding than relying on isolated reports or speculation circulating online. It is equally important to recognize that economic reforms often progress at different speeds. Some initiatives move forward quickly, while others require legislative approval, regulatory adjustments, technical implementation, or coordination among multiple government agencies. This gradual process is common in many countries undertaking large-scale institutional modernization and should be viewed within its broader historical context. For viewers following these developments, the most reliable approach is to rely on information released through official government statements, central bank publications, recognized international organizations, and well-established financial reporting. Verifying information through credible sources helps distinguish confirmed developments from unverified rumors and provides a clearer picture of how economic reforms are progressing over time. As we conclude today's report, the overall picture remains one of continued observation rather than certainty. Iraq continues implementing banking and economic reforms while maintaining its focus on financial stability and institutional development. Vietnam continues strengthening its position within the global economy through manufacturing growth, expanding trade, and ongoing financial modernization. Both economies remain important to analysts studying emerging markets, but like all economies, they continue to face opportunities as well as challenges. Thank you for joining Global Monetary Watch for today's update on July 28th. Our goal is to provide balanced, fact-based coverage of economic and monetary developments by focusing on verified information and official sources. We appreciate you watching, and we look forward to bringing you more informed analysis as new developments become available. Until next time, thank you for watching, and we'll see you in the next update.